All right, guys, welcome back to the channel. So today we're going to review the iShares Core MSCI Emerging Markets ETF, ticker symbol IEMG. This is an ETF that I believe could offer some international exposure in a more specific region. So let me just show you. We're going to break down just the overview first. If you look at it, it trades at $52 a share and a gross expense ratio of 0.09%. That was my goal trying to find in emerging markets, was find a lower expense ratio. But let's get into the composition so you can see what really makes up this ticker symbol IEMG. This tracks the results of the MSCI Emerging Markets Investable Market Index. It invests at least 80% of its assets within the underlying index, and it's all within large, mid, and small cap equity in the global emerging markets. So if you're looking for exposure outside of the US, this is where to look. Asset classification, international equity. It is passively managed, diversified emerging markets. So when I was looking for this, I'm trying to find something outside of the US. So this is what I found. Now, it has a total of 2974 companies, so basically 3,000 companies, but the top 10 makes up 20.78%. And I did some research into these companies, and the only ones that I really understand is TSM, Tencent, Samsung, Alibaba. The other six, I'm not really sure. I've never seen them before, but they're definitely a smaller allocation when it comes down to it, almost less than 1%, so I'm okay with that. When you look where is the equity placed, it is within Asia at 78.56%, Latin America at 8%, Middle East at 6%, Africa at 2%, and look at North America at 0.27%. But let's break it down by country now so you can see where your money's going. China, 23.41%, India, 19.37%, Taiwan, 17%, South Korea, 12%, Brazil, 4%, and then you have Saudi Arabia, South Africa, Mexico, Thailand, and Indonesia. So you're definitely getting some international exposure. What I like about them is the market capitalization is giant, large, and then you still have some mid cap and small cap and a tiny bit of micro cap. When you look at the overall exposure of it, you can see that technology is a big factor here at 19%, financial 16%, you have consumer at 10%, communication services at 7.4%, industrials at 6%. And it's a blend between large value and large growth. Now, the industry exposure, the highest is banks, semiconductors, and technology. So that gives you an idea of what this fund is investing in, and you get 3,000 companies internationally, which I like. But let's break it down even further now. So let's go down to the distribution expenses. It pays a 2.82% dividend yield. So every year you will get 2.82%. You're going to pay a gross expense ratio of 0.09% with a net expense ratio of 0.09%. So to me, not bad for holding international equities. You're getting a nice dividend. And looking at it, it looks like these are the payouts right here. Now, going back to the top, ratings and analysis. Not the best ratings, but you're looking for a very specific, region when you're doing this. You're doing emerging markets international. So the fact set has a 94 efficiency, tradability 84, and fit is 99%. It's a 3 stars out of 716 funds, and the 10-year is 3 stars rated out of 426. Short-term sentiment's weak, which if you're holding long-term, we don't really care about that. The long-term, though, is neutral after 2 years. Now let's get into what's important. Looking at the performance and the risk. If you held this since December 13th, your $10,000 would be worth about $14,000. But to get more specific, let's look at the life of the fund. Now I'm not expecting monster returns because this fund has definitely lagged the S&P 500. But look at the life of the fund, 2.93%. So it is definitely lagging a little bit when it comes to, competing with the overall markets here. So looking at the quarter end average annual total returns, 2.94%, 10 years, or getting you about 3%. So you can get more money putting it in a CD. The question you have to ask yourself is, Is this going to be making only 3% over the next 10, 20, 30 years? That's what you got to ask yourself if it's worth it. Let's look at the statistics here. Institutional ownership is 77%, as you can see right here highlighted on the right side. And just to show you the basics, this is an ETF. It's an open-ended investment company. It is not leveraged. It's not inverse. You could buy this long term if you wanted to. And when you compare the fundamentals of IEMG compared to the international equity median, the expense ratio is 0.09%. The dividend yield is higher at 2.7 compared to the national average of 2.59%. And assets-wise, you're at 76 billion versus 148 million. So there is a lot of money being poured into IEMG, but you have to see, is it worth it to you? There are other comparisons, but the reason I stayed similar to just IEMG is because the expense ratio, as you can see, is much lower. Now, I do think it's worth it to check out SCHE. So we'll take a quick dive into that just to compare it and see what they're doing. So what we're going to do is we're going to go here, and you can compare on the Fidelity program, which is really nice. So we're going to put them together. And on the left side is IEMG. On the right side is SCHE. And I picked them because they're both emerging markets equity and they both have low expense ratios. So we'll go through the basic facts. You can see it here. IEMG is 0.09% versus Schwab's emerging markets 0.11%. But now you can go over different technical indicators to see how the stock is performing. So we're going to do long-term performance and risk. As you can see, the price is very similar, half the price, $52 to $26. And then overall, let's look at the percentage gains. Market total return in 1 year, IEMG has done fairly better at 9.52% and 8.79% to SCHE. But if you look at total market returns, it's not much of a difference, 3.04% versus 3.18%. So it might just be that the emerging markets just has not been able to keep up with, let's say overall just the S&P 500, etc. I mean, this is a different market because when I type in all of the competitors and you look at the total market return of 10 years, IEMG comes in second place compared to SCHE, but it has a lower expense ratio. And you're not really getting much gains out of this, 2% a year to 3% a year. So it's definitely something to consider. If you're adding this to your portfolio, I wouldn't be doing a ton of money, maybe like a 2 to 3% allocation on top added with a different international fund. So it's definitely something to think about. Let's look at the chart real quick for IEMG because it's just good to show this. Let's just look at the max here. As you can see, this fund has been around since 2013. It started at $48 a share. And if you just held this for 10 years, you'd have your dividend of the 2.78%. But I think you have to kind of time this one a little bit because it went all the way up to almost $70 a share and sold all the way down to $52. So as you can see, it's kind of break even. So from an adding standpoint, I think it's okay long term, but I wouldn't be expecting home run returns when it comes to this. If you go out of the max and just go to 5 years, and you started buying up here at 67, just dollar cost averaging, maybe a break even if you kept buying in the 40 region, but it's definitely very difficult to do that when you're not making, average 5 to 8% a year. It's definitely difficult. But if you think emerging markets over the next 10, 20, 30 years could grow into something, then you're going to have nice exposure to these emerging markets and have a lower cost basis, and then over time it'll flourish. But that's really, we're not sure what the future decides, but I definitely want to bring up a different type of fund, which is the emerging markets ETF.